be getting to grips with this topic? Well, first and the obvious one, and again, I think Deanna's presentation made this very clear, is that it's good risk management. It's good risk management to understand these risks, to understand how they can play through to investment risks, to credit risks, to underwriting risks in the portfolio, because there are direct transmission channels by which that can happen. But also by understanding these risks and understanding how they are impacting on businesses, insurers can better understand client needs. This whole nature agenda has profound implications for some sectors in particular. Like when Deanna is talking about the Global Biodiversity Framework halting and reversing nature loss by 2030, there are some extremely ambitious targets and goals sitting behind that to protect 30% of land and ocean resources by 2030, to restore 30% of degraded lands by 2030. And these have very significant implications for sectors that are heavily impacted upon nature or heavily dependent upon nature. In particular, agriculture. Agriculture to nature is like the energy sector to climate change, but also extractive industries, the construction sector, chemicals. All of these sectors have very significant impacts on nature, but also dependencies on different aspects of nature. And so by understanding how clients interact with nature, insurers can better understand how this transition
Hi.
Hi, how are you?
Good. Very good. Thank you. Just testing it. This works. Brilliant. Looks
Perfect.
like
Yeah, it does. That's why I kind of want everyone to join a little bit earlier so we can all just be safe with the system. So, but yes, everything is working fine. Can you hear me okay?
yeah, absolutely perfect.
Okay, lovely.
Cool.
I'm just gonna wait for everyone to arrive, and then I can walk you through a little bit about the logistics side of things. But it's quite straightforward. So the chat is on the right-hand side. This
Mhm.
is what you will see. I will obviously mute myself, stop the camera, and then I will just use the chat to communicate with you. So all the questions will come through Swapcard, which is the
Yeah,
app where everyone is logging in. But I will just add them on the chat. Just to make it easier.
brilliant. Okay, well, I'll turn my camera off until everyone else arrives then. Is
Yes,
that
that's
enough?
perfect. Thank
All
you.
right. Where is everyone?
They're joining now. They're joining now. So I see that Anthony is trying to connect. But yeah, if they don't join in the next like 5 minutes, I have an email ready to go. But yeah, sure. Have you been following the other sessions?
Yeah, I listened to the keynote and some of the first one, but then I have dropped off. Hi, Anthony.
Toby, you made it. Are you at?
I did. I actually found I decided it was too long. It was too far to get to the offices. I was too late, so I found a room in the Accent. I'm using my phone, so it should be okay. It'll be all right. But thanks very much for sorting that out.
No problem. Okay, I've got a bit of an echo in this room. I don't know if that's coming through on my microphone at all.
It's not.
No, it sounds fine.
Okay, good.
Okay, lovely. Well, thank you for joining half an hour before. We don't need to stay on for the rest of the half an hour, but I mainly just wanted to check that audio and video were working okay. And then there's just a couple of housekeepings, mainly also for you, Anthony. So this is what you will see during the session. So this is basically your view. Obviously, I will mute myself, stop the camera. I will post all the questions that people ask into the chat. So I'm just doing a test now. The chat is just for us as well.
Okay.
If you need to communicate with me throughout the course of the session or to the other panelists, just feel free to use the chat. No one else can see it. But yes, just make it easy. I will post all the questions and then feel free to either drop them in the middle of the discussion or leave them at the end.
Sure.
Anthony will join back at the end of the session to do the closing remarks. So don't worry if you see him coming up. He will just join 5-ish minutes before the end. So you have an hour.
Is his appearance a sign then that we need to
It
start
is.
wrapping up?
It is, but I think he will actually might join maybe like
it's like the Grim Reaper turning up at the party or something.
Yeah. So when you see him on camera, that's when it's time to wrap up.
Right.
And also he usually asks the other panelists just to stop the camera at the very end once the panel finishes, so he can just do the closing remarks. And then we just stop the video. But yes, so the session is an hour, but since Anthony is joining for the last 5 minutes, maybe just have 55 minutes, and I can put you some reminders when you have I don't know, 15 minutes left, then 5 minutes left. Just to manage your time, if that makes it easier.
Good. That sounds fine. I mean, it's kind of a little bit unknown, right? In terms of, I think between us, we've got more than enough to be able to speak for that length of time. But hopefully, we've got some good questions coming in as well. And
it always goes by faster than you think.
As long as some more people turn up, otherwise it'll just be me and you.
Right, exactly. Well, I hope you've got a lot to say. And Sophia, how many attendees do we have?
You know what? I was actually checking. Let me just recheck now. I think it's quite a few because I saw that quite a few people voted post the questions. So let me just check. Okay, nice. So there's about 100 people registered, and at the moment it's 80 logged in. It's quite good.
That's pretty good. Yeah.
Yeah.
How many logged in? 80 logged in?
Yes.
18. Oh, wow.
18, 18 would be.
I hope I don't get stage fright. That's the.
Fortunately, you don't get to see all 80 people.
Yeah.
Hi, Sarah.
Hi, guys. How are you?
Hi, Sarah.
Very good.
Good.
How are you?
Yeah, pretty good. I moved houses yesterday, so
wow.
Right.
I'm busy a few days. And I was yesterday morning, as soon as we got to the new house, I was like, okay, got to make sure the Wi-Fi and everything's set up. But thankfully, it's been pretty smooth transition so far. Anyway, so
good.
That's good.
Are you still in? Was it Brittany that you said?
Yeah, we didn't move far. We've been in a rental, and we bought this house, but we've been renovating for the better part of this year. So nice to finally be living here. Although there's still a few things that we need to finish up on. And
I've
there's boxes
I've been through that.
everywhere.
I've just been through that process.
Okay.
The problem is once you're in, everything slows down so much that
I
you're
know. Yeah.
it's a very long tail, shall we say.
Yeah, which I guess, I don't know, lots of projects to look forward to, but one way to think of it. Yeah.
Yeah. Okay, so James remains a mystery then.
I'm just sending him a reminder now. So, okay, yeah, so just waiting for James, really. Sarah, your audio and video is perfect. So nothing
Great,
else that needs to be tested. I was just saying there's a chat on the right-hand side, which is for us to use. So I will be posting questions on there. And also, if you need to communicate with me or with Anthony or the other panelists throughout the course of the session, feel free to use the chat. That is just an internal chat.
Oh, great. Okay.
We have about 80 people logged in at the moment, which is quite good. And there is just maybe like a half a minute lag. So I will ask you to start at 2:29, and then I can just let you know on the chat when you're live.
Okay.
Okay, so we join, we wait, and then when you say yes, then we start. Is that it?
Yes, so I will just say at the moment we can just mute ourselves, stop the camera, wait for James, and then maybe we come back 5 minutes before the beginning, and that's when I will stop my camera, mute myself, and I will then let you know when you're live.
Okay, got it. We should wait for James still.
Yeah. Sounds good.
Hey, James.
Hey there. How's it
How are
going?
you?
Good, good, good.
Hey, James.
Hey there.
Thanks
I've
for
got
your
a
bits and pieces back and forth today.
no worries. I've got a bit of a dawn chorus going on here with some leaf blowers outside. So let me know if it causes a distraction. I'll go on mute. But
Can't hear anything so far.
good.
Yeah.
Okay, perfect.
Cool.
Well, thank you, James, for joining. I just wanted to test audio and video, which is working fine. I was saying to the others that there is a chat box on the right-hand side, which I will be using to communicate with you, but you can do the same throughout the course of the session. That's a private chat. And also, Anthony, I forgot to mention, if you can just let the audience know that they can post their questions or they can write their questions in the chat throughout the course of the session, that usually encourages people to do that. So maybe just say it a couple of times.
Yeah, will do.
Okay, perfect. Lovely. So we're live in 15. So we can, I mean, if you want to discuss anything before the session, feel free to do so. But if not, we can just go on mute, stop the camera, and then come back maybe like 5 minutes before.
Great. No, I think I feel like we're well organized and know what we're doing. So unless anybody else has any questions, we can drop off and then rejoin in 10 minutes. Or 10
Perfect.
minutes.
See you later.
Cool.
Sounds
All right.
good. Thanks
See you
all.
then.
Look forward
Bye.
to it.
Thanks.
Bye.
Cheers.
Hey guys,
Hey, James, how are you?
all good, all good.
Good.
It's like the whole gang's here.
And a good thing too.
Ready to go. Yeah, exactly. Just in time.
It's a good event, this one. I'm very glad that Ant and the team are running it. So good,
Yeah.
good to see.
Yeah, definitely.
It was Thanksgiving here in the US over the weekend, so I just treated myself to some performance enhancing pecan pie as a treat.
Well played.
How long do the leftovers last?
Yeah, there's a very slim tranche left,
Right.
rapidly depleting as well.
Where are you based, James? Or are you just in?
I'm
US?
on the East Coast, so from the UK, but
Yeah, okay. Nice.
Is Keita a US insurer then?
No,
Because I know one of the people that works at one of the investors.
no, UK firms. So
Right.
Lloyd's cover holder.
Yeah.
Most of the team are there. There's two of us in the States, but the
Right.
CEO founder is an American woman. So we've done an exchange program.
Nice.
Ah, interesting.
Yeah, I always miss Thanksgiving. I live in France now, but it is the food, the pecan pie, the pumpkin pie, the turkey. It's always a sad holiday to miss, but couldn't make it this year.
Toby, quick question. AXA Climate, is it still a parametric only insurer? Is that an appropriate way to describe it, or?
You could say we're the climate or the weather and natural hazard underwriter for the AXA group. I think
Right.
that's
Good.
that's the
Okay.
best one. Because we potentially do more than just parametrics.
Okay.
Just
Cool.
to let you know, you have 1 minute left.
Thanks, Sophia.
We're really on time. I'm impressed.
Yes.
Well, when Anthony appeared,
So Anthony will only appear at the end, by the way, because he's moderating another session. So if you're okay,
right.
kick off this one. Yeah, that would be great.
Mhm.
Okay, I will now just go on mute, but I will let you know in the chat once I go live.
Okay, hi everyone, and welcome to our panel discussion on nature positive insurance, getting started with nature-based solutions. We've got a great lineup here of experts from a whole range of different types of insurance, covering demand, covering supply, covering different kinds of nature-based solutions. And what we want to do in our discussion is, first of all, unpack what we mean by nature-based solutions. Each of those words does a lot of work in that phrase, and then talk about the kinds of things that are being insured within the nature-based solutions, some of the interesting features of insurance some of the challenges, and then what we see is the maybe the future for insurance of nature-based solutions. So my name's Anthony Bice. I'm moderating the panel. I'm a partner with Oliver Wyman, and I lead our climate and sustainability platform for insurance and asset management. So great to see everybody. We have 3 panelists here. So first of all, Sarah Conway, who's a director at Willis Towers Watson. Sarah leads the ecosystem resilience practice within the disaster risk finance and parametrics team. She spent the early part of her career in traditional finance, but the last 15 years in conservation and climate finance for public and private sectors. At Willis Towers Watson, she helps to design, deploy, and scale prearranged trigger-based financial instruments for ecosystem conservation and restoration to enhance the resilience of natural assets and the livelihoods that are dependent on their services. Second up is Toby Behrman, who's the head of London Market and Public-Private Partnerships at AXA Climate. AXA Climate is the weather and natural hazards underwriting business of AXA. Toby spent over 20 years structuring and deploying financial products globally through commercial and public sector channels, most recently at Global Parametrics, where he implemented parametric solutions to close a protection gap in lower and middle income countries. And then thirdly, we have James Kench, who is from Kita. Kita is a carbon insurance specialist, a relatively new startup. Their mission is to enable high-quality carbon project scale by offering a portfolio of insurance products that reduce carbon risk. James is the head of insurance, and so his role is focused on distribution, product development, and building capacity in the market. So I'm sure you'll see now we've got some really deep expertise across a whole range of different topics here. Sarah, I think I'll start with you, because I think it's very interesting to understand the demand side for insurance when it comes to nature-based solutions. So, as a broker, you represent the buyers of insurance, but you also get involved, I think, in structuring products, and this is an area, being quite new, where I can imagine the advice of brokers is going to be absolutely paramount in acting as an interface between buyer and provider. So maybe first question for you is, who's buying insurance for nature-based solutions, and what is it that they're insuring?
Thanks, Anthony, and thanks to you and the Better Insurance Network for inviting me to join this esteemed panel. Good question. And I guess, maybe just to quickly start with a few kind of initial framing points. First, while every insurance policy obviously needs to have a policyholder, the policyholder doesn't necessarily need to be the entity which pays the premium for the policy or that serves as the end beneficiary that deploys the payouts should a triggering event occur. Second, in terms of the type of insurance, so generally when thinking about insurance for NBS, we're talking about parametric insurance. And I guess third, just in terms of what is or is not being insured, because sometimes this is a point that gets a bit confused, we're generally providing insurance cover that, if triggered, releases funds that support response interventions that, for example, replace ecosystem-linked revenues impacted by an event, or that help to fund other actions that support the ecosystem itself. We are not insuring the underlying ecosystem, for example, the coral reef, or its sort of total economic value. So maybe an example might help to sort of unpack some of that a bit more. So let's take the MAR insurance program, a program that we at WTW have helped to design and continue to support, just as an example. So briefly, the MAR insurance program is a regional financial mechanism. It uses parametric insurance to rapidly deploy funds for community-led response activities which repair reef damage following destructive hurricane impacts. These response activities help to boost reef recovery and restore and enhance the conservation of endangered coral reefs, spanning 4 countries: Mexico, Belize, Guatemala, and Honduras. It's about 1,000 kilometers long. For this particular program, the MAR Fund, which is a regional environmental fund whose mission is to drive funding and partnerships for the conservation and restoration of the MAR, serves as the policyholder. The MAR Fund then partners with conservation entities in each of the 11 covered areas, and via their sort of broader conservation umbrella called the Reef Rescue Initiative, provides capacity building for the reef guardians, and ensures that each of these 11 sites have a reef response protocol in hand for if when a triggering event occurs. If a triggering event should occur, the MAR fund would receive the payout from the insurer or insurers, usually within weeks of the event. It's worth flagging Exit Climate is the sole insurer at the moment. Immediately, after receiving the funds, if and when a triggering event occurs again, they would then transfer them out to the relevant local partner or partners to allow them to execute that reef response protocol. So circling back to sort of who pays. So in the case of the MAR insurance program, the latest renewal received financial support from the Insure Resilience Solutions Fund, ISF, as well as the United Nations Development Program, UNDP. And the program is sort of building on earlier support from the Ocean Risk and Resilience Action Alliance, ORA. MAR Fund, I should say, is also currently sort of working on a longer term sustainable financing strategy to ensure that they have sufficient premium to carry the program, ideally into perpetuity. For them, the value of having parametric insurance is really high, and it's probably the only mechanism that would actually enable and give them access to the necessary resource at the speed and scale required immediately following a damaging hurricane event. Other entities, be them government, other NGOs, conservation funds, private sector, may also be interested, and we've seen interest in these types of products for NBS and the underlying ecosystems. It's really less, I guess, about the entity and more about whether there's really a compelling use case to justify the cost of a parametric insurance policy. Quickly on that, when we think about NBS and ecosystems and their services, we generally tend to see two clear sort of sweet spots. One is where having money very quickly after a shock event has high value, and the other is where the value is guaranteeing that important payments will be made after a shock event reduces or eliminates their normal revenue stream that supports those payments. So for one, the value of early money to restore the sort of non-monetized ecosystem services has to be high to justify that cost of locking up accessible capital, the margin you're paying over the pure risk for any insurance. And this has proven, scientifically and practically true for the case of coral reefs, where engaging in that immediate reef response within a critical sort of 30 to 60 day window following an event can yield, positive outcomes for the coral reef ecosystem that would be lost if you didn't have that financing very quickly. And the second, example really only applies where you have ecosystem services that are being monetized in real time. For example, a marine protected area that's relying on sort of tourism fee revenue to cover some or all of its ongoing operating costs, but that would, potentially foresee a decrease in tourism due to a climate event. In that case, the payout would be deployed to cover their sort of business interruption, quote unquote, or the loss of earnings to ensure that they could carry on with monitoring, surveillance, all the necessary things in an uninterrupted fashion. So yeah, I think I covered your question. I'll stop.
Yeah, and in that latter case, does that mean it is the tourism businesses, for example, that are buying the insurance rather than?
Yeah, exactly. So I mean, depending upon sort of who has the remit or oversight responsibility for a given marine protected area, which is to some extent sort of country or regionally defined, right? So in some cases, it's the government who has been entrusted with the duty of care of an MPA. They might be interested in a parametric. In other cases, you see, sort of public-private partnerships, groups like Blue Ventures. So yeah, it sort of depends on, I guess, who has oversight, but indeed, it's sort of serving as a bit of a business interruption cover, but with a twist.
Right. And I think one of the challenges we always hear about parametric insurance is kind of proving the insurable interest, and that the product is actually covering, sort of indemnifying losses rather than, essentially being a bet on weather. How important is that when you're thinking about, the kind of insurance that you're putting together, regulatory challenges and so on?
Yeah, no, that's a great question. And indeed, it does come up in pretty much all of our transactions. I mean, it is a very jurisdiction and even insurer specific sort of question. I mean, ultimately, it's on the insurer to demonstrate that it's meeting its relevant insurance regulations in their jurisdiction, to sort of ensure that it is indeed insurance for tax and accounting purposes. In the case of insurance for NBS, you know, especially if the ecosystem in question is a public good or under the duty of care of government, demonstrating that insurable interest, you know, is a bit more difficult, you know, than demonstrating the insurable interest of your home, for example, right? But it is possible, and there is now precedent given the Mar Insurance Program, as I mentioned, a similar program in Hawaii with the Nature Conservancy serving as policyholder, and a few others. So I guess just sort of showing how that happens in reality, you know, let's take a conservation NGO. It has been, you know, conserving, restoring a coral reef ecosystem for years. These activities have been made possible because of generous donations from individuals, foundations, corporations, and so on. Yet these conservation gains that those resources and that the NGO sort of business have been able to achieve could in some cases be exposed to climate-related hazards and could potentially be wiped out, you know, if a tropical cyclone were to pass through that covered area. So in other words, the business of that conservation NGO, the thing it's raising money to do is to conserve the reef. And so to not be in a position to respond quickly and at scale when an event which causes damage to the reef undermines that business model. In other words, you know, it's in the interest of the NGO to be able to finance response to a damaging event, because to not do so would undermine their business model. A complementary view, I guess, would be, you know, if its mission is related to the restoration and conservation of the ecosystem within the covered area of interest, if it has a track record of undertaking its mission by, you know, injecting financial resources into conservation of the reef, if they have agreements in place with relevant government authorities to undertake those reef restoration actions, these are all things, you know, that could sort of go towards demonstrating that they would have a quote unquote insurable interest in the reef. But you know, those are just some examples, and I guess I would say that often, you know, the insurable interest question is one in which we get the lawyers involved to just
Right.
make sure all the T's are crossed and I's are dotted.
No doubt, and maybe, you know, teeing us up nicely for Toby next. What is it that you and your clients are looking for in an insurer, in insurance?
I guess it's sort of a big question. I think if I refer back to what your colleague Rob Bailey at a previous panel, he said 50% of global GDP is dependent on nature. So our clients are looking for a solution, are looking to protect themselves because nature is being degraded all the time. In fact, I would say probably more than 50% of GDP is dependent on nature because I guess humanity is also part of nature. So it's a significant risk that our clients are facing, and they're realizing that nature-based solutions are critical to reducing these future risks and building resilience to what we're seeing now. So it's a key, I think, good business for an insurance company to, as we're in the business of risk, to start thinking about how we can help our clients when they're sort of seeking these out. And I think for, you know, AXA Group is a big group, and we're making nature one of the key pillars. But AXA Climate itself is much more focused on the client's needs when they're looking to sort of consulting for when they're looking at sort of long-term deployment of assets, the climate and sort of nature diversity sort of risk screening side of it. And then this idea of risk financing to secure their investments as well. So it's the two panels. It's to understand what their risks are and it's to secure the investments that our clients will make in either nature-based solutions themselves or other business lines. We call this, actually we don't call this was coined earlier on today in the talk, nature positive insurance.
Very good, very good. And so what is it then that you need to consider as an insurer? What are the sort of key factors that go into, you know, when you think about designing, structuring, and ultimately pricing an insurance product?
So there's obviously there's two sides of the story here. There's the hazard itself, whether it's what's causing the problem, the exposure, what is exposed, and the vulnerability. It's the typical risk equation that we've spoken about before when we're looking to sort of structure a product on that side of it. A lot of it is obviously understanding what the risk is, what is being affected, and what needs to change. whether that's a sort of, we talked about mangroves, we've talked about in previous discussions, woodland, we've talked about reefs. So you have an asset here which has some kind of vulnerability. And then it's to try and think about, okay, how can we solve that vulnerability? Whether it's a parametric product, as Sarah's been talking about, whether it's an indemnity, whether it's something else. So it's a sort of partnership between the client side and the insurance side to say, what is the risk? What is it vulnerable to? And how can we come up with a solution that fits both parties?
And just thinking about climate change, right? Because a lot of what we've talked about so far is kind of independent of whether climate is changing. I mean, weather still happens, you still get nat cat events, they still affect mangroves and coral reefs and so on. How does climate change factor into how you go about this? So do you, particularly if it's parametric, you've got a bunch of underlying equations that are governing your assessment of the probability of a claim.
So I think there's two elements to this. One is obviously nature-based solutions are long-term investments. So the clients are looking to do, this is not just something they want to do once or in 1 year. This is something they're building for 20 years, 30 years. So you have to have that long-range view of climate, which is more sort of climate analysis, understanding data, looking at these weather models and looking forward. But then for insurance, typically we are looking at annual policies. So you're looking at what the variability is of that individual year or 2 years or 3 years, depending on moving forward. And that very much relies on looking at the data that we have now, trying to look at trends going back 10, 20, 30 years to understand what that means moving forward. And that's purely about getting more access to better information, better data, understanding the history of the client and seeing what's changed on that side of it. But it's becoming more challenging because climate change is changing what we call the variability of the weather. And it's making things much more difficult to look backwards in time and say, all right, because it happened in the last 20 years, it's going to happen next year. But that's where a lot of our sort of scientific acumen comes in to try and understand that.
And you both mentioned parametrics as being the sort of primary product here. Is it primarily a market for parametrics? Is there indemnity insurance? Is it a thing? Is it growing? Sounds pretty hard.
Yeah, so this is very new. So I think it's taken quite a long time for people to understand what these risks are. And as you say, once you understand that you've got a problem, you've got a risk, it's how to price it, how to come up with products. Parametrics have always fit they fit more naturally because parametric products have been working against weather and natural hazards for some time, and we can we have some understanding of how that works. So I think that's why we've gone to parametric solutions first. But there are other solutions as well, because if we're looking at regenerative agriculture, where you maybe look at sort of yield insurance, there are potentially indemnity programs as well that can be look at sort of the change in value of an asset over a period of time. I'm sure James at Kita will give you some views as well. So I think parametrics is one tool in the toolbox, but there are other ones, and some which we may not even thought of as yet.
Okay, interesting. And the sort of the insurance value chain, if you like. I mean, we've got carrier here, we've got broker here. How does that work overall? Is it a sort of fully functioning market? Is there enough capacity coming in? Is there recognition and understanding of the role and value of insurance?
I would say not yet. I think it's early days. I think AXA are taking a leading view on this and a leading position on these programs. I think we're trying to support as many as we can. We're trying to work with brokers, with MGAs on the ground, with distribution, but it's very, very early. I think there's a lot of education for the clients. I think they realize there's an issue, but I think there's much more education on their side. So I think that it's going to be a strong push from the broking community. And then also with other people coming up with innovative and different products like James and Kita. I think we're at early days. The value chain is not yet fully structured. It's not like a typical life insurance product or whatever. We're still quite bitty, but I think talks like this, helping people to start understanding and noodling these kind of concepts and these kind of solutions, is where we have to go.
Great. That's a good segue, I think, now to James and the kind of work that Kita does, James. So as I understand it, and correct me if I'm wrong, primarily you're focused on the voluntary carbon market, so providing insurance to providers or buyers of carbon credits, carbon offsets, and so on, which is a very specific application of nature-based solutions. In particular, can we put in place a natural solution which absorbs carbon and we can monetize the carbon credits? That market is early days. Insurance is, as always, is a great way of de-risking and helping to spur the growth in that market. So maybe tell us all, first of all, how that market works overall, and then a little bit about the business that you do.
Yeah, sure. And first, just want to say thank you to Ant and the Better Insurance Network for putting on this event. We think it's a fantastic event, and it's great at raising awareness of the risks and opportunities in this space. And then I thought the keynote, thank you to Diana there, because we really support that concept of nature positive insurance. It's it's the whole heart of what we do. As you said, our mission is how do we use insurance to de-risk high quality carbon removal and help it to scale. And we think insurance is the key to unlocking the institutional capital that the segment needs to really protect nature. We see it operating in kind of three key ways. So it's how do you add the extra layer of due diligence? How does that add a stamp of confidence to allow buyers to kind of invest in these projects with confidence? And then most importantly, it's there to pick up the tab when things go wrong. And you just touched on the carbon markets. I think it's important to highlight kind of two kind of framing points there. We look at the carbon markets in general. There's two aspects to that: the compliance markets, which are regulated, and the voluntary markets, which are unregulated. We look at both, and we see opportunities for insurance in both. But we think over time that they'll start to converge in different ways and different rates, depending on regulation and geography over time. But both have an impact now and are a necessary step in the right direction. And then on what are carbon credits and why they're important, this discussion is focused on nature-based. We look at nature-based and engineered solutions, but nature-based obviously super important. If a carbon credit in order to be classified as nature-based, then it needs to be working with nature, which is super important. It's capturing carbon, but doing so in partnership with nature. And there's sort of three ways it can do that. Either you're protecting it from loss, so that would be your REDD+ type project, or it's improving the management of existing nature, natural capital, such as IFM, improved forestry management, or it's restoring native cover, so the ARR, afforestation, reforestation, restoration. So that's the what. The why we think carbon credits are super important is that they're the only real scalable financial instrument to drive investment into this kind of climate action. And the challenge is that if the value for the destruction of nature is greater than the value in protecting it, then that's always going to be a kind of equation that is off balance. But we think the insurance opportunity is massive. I like what John Neal said around climate, that this is the single biggest opportunity he'll see in his career in insurance. I think that applies to the next 30 years for sure. In terms of carbon, we look at it in terms of two aspects. There's the assets and liabilities of the carbon markets themselves, which are forecast to grow to a sort of a $1 trillion market by 2050. And then there's the assets and liabilities of the stakeholders and investments operating in this space, which would probably be your more traditional P&C coverages, your D&O, your GNL, GL, etc. I'll focus on the carbon space. So for us, we look at it in terms of three dimensions around what are the pain points and where does insurance come in to solve some of those pain points from a risk transfer, more on the indemnity side. So we look at the life cycle of a credit, looking at the key stakeholders, which I can maybe cover in a follow-up question at this time, and then look at the different types of carbon projects and what are the different exposures for them. But I think the life cycle of the credit is a key one at just kind of mapping out and thinking about the potential products. So there's three key stages of a carbon credit life cycle. So there's the pre-validation part, the pre-issuance, and then post-issuance up to retirement. So pre-validation is where a lot of the risk is. That's the project initiation, scoping, financing, and the key insurance risks there are around the sort of credit counterparty risk. So as a potential buyer of these credits, can I invest? Can I put money down to support this project? There's also a surety play. So as the project developer, how can I make this project bankable and get the financing that I need? There's validation risk. So can the project get the carbon markets accreditation that it needs to start the project and to start driving value for its investors? and the local community. And then there's the political risk. So things like the UN Article 6, will this project have the license to operate from its host country? And will it be able to export its credits now and in the future? So that's the sort of the pre-validation, and a lot of risk there. And then we go on to pre-issuance. So that's the project has been validated. It's got the sort of the stamp of approval to go out and become operational. The main risks there we think are on delivery. So, can the project achieve what it wants to achieve? And we think about this in sort of three risk buckets. There's avoidable risks, unavoidable risks, and then sort of carbon market bespoke risks. The avoidable risks would be your kind of counterparty risk. So the default of the project developer, do they go insolvent? Does the price of timber sky high and they just kind of cut down the trees and abandon the project? And any kind of fraud or negligence in the execution. So it's more of a kind of credit type risk. Then there's the unavoidable risks, so the physical risks of wildfire, drought, pest, disease. So your more traditional nat cat risks. And then the carbon risk is, will the project be invalidated because of the methodology change, or if the carbon standard itself is sort of wound down or becomes insolvent, or regulations change. So that pre-issuance is the real chunk of risk as well that we focus on now. And then there's post-issuance. So credits are issued and now they're going to be traded, or they're actually going to be used and retired. The key risk there probably is around invalidation. So I have a credit, what happens if it becomes invalidated, either through sort of the fraud or negligence of the underlying project developer, if they've mismanaged the project and that sort of turns out that they've overstated its claims and its achievement. And then the carbon risks and the political risks that I mentioned before still kind of apply into the long-term life of the credit. And then there's the longer-term reversal or sort of durability risk, so that the carbon's been sequestered, but what happens if it's released from wildfire, from degradation, or land use change, particularly competition for timber, soy, cattle, all those types of products. So those are kind of the life cycle of credit, and there's lots of bespoke coverages there that we think insurance has a massive role to play. The stakeholders I can go into later, but then in terms of carbon project types, looking at both nature-based and engineered, but nature-based, that long-term risk is really around that reversal risk that I mentioned. There is a little bit of a nuance between some of the types of nature-based projects. So if it's an existing sort of natural capital that's out there to be protected, so your IFM or your REDD+, then there the risks are more around sort of the baselining risks, additionality, leakage, so a little bit more kind of protecting what's there, and some of the reputational risks and integrity of the project, versus a sort of afforestation or reforestation project. That's really that sort of delivery risk. But the key, as with all insurance, is to understand that risk and be able to underwrite and price them appropriately. So I'll pause there.
Maybe just a couple of additional questions. First of all, presumably then the buyer of the insurance is a different party in each of or potentially a different party in each of those three phases. Is that right? So it's not just the same buyer all the time.
Yeah, so I think the potential insured, there's probably four potential kind of buckets of insured. So there's the buyer side, the sell side, there's intermediaries in the carbon space, and then the sort of enablers, the sort of the plumbing of the carbon markets. The buyer side would be your corporate investors looking to buy credits for their own offset strategy or for sort of a climate positive strategy, or there's investors that are looking, maybe potentially speculative, but they're looking to invest in carbon as an asset class, and they'll then sell on to off-takers. They're looking more around protection of their principal or protection for their investment return, versus the corporates that are thinking more around sort of reputational risk. The supply side would be your project developers. So they're thinking, how can I make my project investable and bankable? The challenge for them is just scaling up finance and credit risk. The intermediaries, so there's carbon brokers, marketplaces and exchanges, and they're worried about, will their buyers and suppliers trust the integrity of the credits that are being traded on the platform? So again, sort of reputational risk, worried about invalidation, reversal. And then the enablers, the credit ratings, MRV, ratings agencies, so rating agencies, and the carbon standards. Again, it's around sort of the reputational risks and the trust of what they're doing. I think the most interesting one there for the insurance industry is the standards. So the standards have and manage a sort of self-insurance mechanism in the carbon markets called the buffers. And we think there's a big opportunity there for insurance to either supplement, complement what they do, acting as a backstop or sort of excess of loss to replace credits that have been lost by invalidation or reversal, but also in terms of that kind of risk assessment. So the buffers are, the amount of credits that need to be put into the buffers are based on a sort of risk assessment, and I think the insurance industry is well placed to do that risk assessment and management of the buffer tool. So lots of opportunity, I think, for the insurance industry in that space.
And just on that last point, and maybe this is one that we can open up to all of you. And actually, before we do that, a quick reminder: if people out there have got any questions, please drop them into the chat, because I think it's a fascinating topic. It's a very new topic, so I'm sure people are still scratching their heads a little bit, or equally very excited about the opportunity and want to know more. So please do put your questions into the chat, and they'll make their way through to us. I'm interested in what happens when a claim is made, and presumably it's different for the different types of insurance that we've heard about. But particularly, how do you manage basis risk? I mean, presumably, James, you don't have a forest somewhere that you can sort of draw upon and give a bunch of trees to somebody who's had a reversal loss, for example. How do you all manage that?
Yeah, true. I mean, so I think in the short term, basis risk is not something that is we would look to insure. Longer term, I think there is a play in the insurance industry to build carbon credit funds, and then in that case you can hedge that basis risk against what is sitting in the reserve pool. When we think about claims in a carbon credit space, for insurance, there's sort of three elements. There's the what is the form, the payout itself, what are the triggers, and what is how do you assess the loss? I think the payout is the most interesting thing. So traditionally it's normally been a cash payout, but we're looking. We have a mechanism for being able to pay out claims in like-for-like credits. The challenge there is that not all credits are created equally. So in theory, one ton of carbon removed or avoided is 1 ton of carbon. But from the insureds, the buyers, they don't see the carbon as being fungible. It's not like Brent crude or West Texas Intermediate that you can just sample and measure, and it's all truly standardized. It's in practice, particularly the buyers are very discerning about the attributes of the credit, and they want whatever they're buying. If there's a loss, they want the replacement credits to be as close to that, as close to that in terms of as their original purchase as possible. And there's, I think that the key there is working with the insured to say, well, how do you determine what is the credits attributes that you care about, and how do you prioritize them? Is it the credit rating? What's the perceived quality of that credit in the market? What's the durability risk of the project? Probably more applicable to the sort of engineered solutions. But for MBS, what is the leakage? Did that project have an impact on just shift deforestation to a surrounding area, as well as protecting what it's done to in that local area? Buyers care about the geography, so which country or region is it located in? What is the carbon type? Was it a removal project or was it avoidance project? And importantly as well, what are the co-benefits? So what is the local community impact? What was the sort of revenue sharing and engagement with the local government? And more importantly, or increasingly important, is the biodiversity angle. There's an emerging kind of biodiversity credits market that is coming into play at the moment. A lot of that sort of value of the biodiversity credits are kind of baked into the nature-based solution, and we would argue that a key element of the value that they drive. So it's the ability to offer payouts and like-for-like carbon credits is a key USP for the insurance industry, and we can kind of work together to kind of think through what does good look like in making those payouts. Just quickly on the triggers, for delivery risk, that would be an under delivery or a complete non-delivery of the credits on a kind of defined disbursement schedule. Either it could be annual for REDD+, or it might be for ARR, sort of a longer, typically a sort of 5-year timeline. For political risk, the trigger might be your license to export has been revoked, has been cancelled. You may have a letter of authorization from the government that's been revoked, or you might have an agreed revenue sharing percentage with the local community and the government, and then the government turns around and jacks that up sort of 10-20%. And for the invalidation type coverages, that would be if there might be a sort of a investigative journalist piece that kind of raises some of the issues of a project, but you really need a defined trigger of what was the underlying fraud that the project promised to achieve, but didn't deliver when it sought to get its license to operate. So a host of triggers there, but I think the key is to be quite as clear and objective to make it reasonably easy to assess in the event of a loss. And in the event of a loss, it's around, at the moment, a kind of manual inspection process. You have to send an order to sample and investigate and measure the carbon drawdown, but that's increasingly becoming automated. There's remote sensing technology that can do that from afar. So some useful tech enablers that are going to make this an easier process for all.
Right. When it sounds like you're running a very complex multi-product insurance company that just happens to be dealing in one particular sector. Yeah. Sarah, maybe sort of widening out a bit to some of the other types of insurance that you were talking about earlier. I'm hoping your claims process is a bit simpler than what James described particularly when it comes to parametric, but maybe more broadly insuring sort of wider nature-based solutions. Is that a straightforward process, or do you also have similar kinds of complexities that you and your clients have to deal with when you're dealing with Toby and other people?
Yeah, no, it's a good question. I mean, basis risk, since the trigger or payout, right, for parametric insurance is based on the underlying hazard that you're protecting yourself from, it might not perfectly correlate, right, with the actual sort of on the ground impacts or damage. So I guess, at the front end, when we're starting to sort of conceive of and design potentially relevant solutions, we work very, very closely with our clients, with the relevant local partners to understand, if we're talking about a Category 5 event, how much money would you need to, again, sort of engage in those immediate restoration interventions that have the highest value if you can deploy them quickly? What if it's a Category 1 event? What proportion of your costs are fixed versus variable? And we try to sort of structure the payout matrix associated with different triggering events as closely as we can, right, to sort of serve as a proxy for the damage and the needs that they would face. When it comes to actually, sort of going through the process, we at WTW often serve as the calculation agent, especially for projects or programs and products that we've been a part of designing. And I suppose that's probably a term that's familiar to many in the audience, but just quickly, the calculation agent plays a very important sort of inherent role in any parametric transaction, essentially providing that loss or claim settlement function in the exact way that's captured in the policy itself. So, as with traditional loss adjustment function, the calculation agent is almost always independent of the parties to the insurance transaction itself. With that independence creating the circumstances which allow for fast, fully objective, and ultimately binding claim settlement processes free from negotiation, right, arbitration, legal question. That role, encompasses the collection of data from what is generally known as the reporting agency, generally at a very specific time relative to some measure of the event timing. For any event which is or may be eligible for a payout under the policy conditions. Often that calculation agent plays the role of monitoring, say, cyclone activity in the area of interest and initiating the loss validation and settlement process once an event becomes eligible under the terms of a given policy. The calculation agent is then responsible for processing, right, all that data, and following a set of procedures that are pre-agreed and which fully captured the parametric calculations that had been laid out at the beginning in the policy terms themselves. This ultimately results in the issuance of what we call an event report to all parties to the policy, right? The insured and the insurer or insurers. And that acts as sort of an unambiguous basis for settlement of claims between the insured and the insurers and reinsurers.
Right. Okay. Toby, it sounds like you're sort of, to some extent, at the back end of all of that. From your perspective, how does the claims process work? I guess once you receive that report, is it just a case of, okay, we want to pay out as quickly as possible, or are there other factors that come into play? You're on mute there.
And with insurance, the key thing to make sure is, has there been a loss? So I think one of the measures is obviously once the event has occurred, then if it's parametrics, then there is going to be a payment, but we need to have understanding of some sort of loss report to make sure we don't overpay, so there's no speculation in the product on that side of it. But it's usually quite quickly. But I think one of the key things for us as insurers is to understand that we're actually paying the right amount and we're actually covering the risk that the client actually has. And as you say, in some of these solutions, it's difficult. There is this concept of basis risk, the concept of, are they buying too much coverage? Are they buying not enough coverage? Or are they looking to cover themselves for an event which isn't insurance, which is just a fact? You know, a tropical cyclone comes in and it will knock down some mangroves. Is insurance the right thing that they need to buy? Or are they looking for, is there a different kind of risk strategy that they can use, which is why we try and help them on that too. And then, you know, there's one of the key things obviously is the cost for them. There's no point for them buying an insurance solution which is so expensive that it's going to make whether the initial investment not worthwhile, or they can't sort of grow or scale. So what we try and do is make sure they're buying the right protection for them at the right price on that piece.
And just looking at some of the poll responses, the second poll, what's the biggest barrier to getting started? It looks like the results came in predominantly internal resources and expertise, and then secondly, data limitations. Toby, keen to get your sort of reflections and reactions to that. How does that tie in with what you see as an insurer that's already doing this? Does that align with your challenges?
Yeah, I think there are sort of three main challenges. One is to get the internal buy-in. People say yes, they want to do it, and that can be very difficult because people don't understand the product can be quite complicated. The view of whether we need it or not, so to get all the stakeholders involved is the sort of the first one. Second one is people always want more protection than they can. It becomes more expensive, and so the question is, how much is this going to cost? And to understand actually what kind of risk they need to purchase, or whether they need to buy the product, or if they do product, are they looking to cover something that happens every day or something that happens in, you know, every 100 years? It's that kind of understanding as well. So, and then on our side as well, you know, as an insurer, we will take the risk, but we're not going to. We obviously, there is a sustainable aspect of that as well. Insurers are not charities. They have to make a revenue so they can keep offering the product moving forward. So it's making sure that product is sustainable, because otherwise there's no point getting insurance for a nature-based solution where the asset is going to be there for 100 years if we're only going to insure it for 1 year. It's crazy. The final one I would say is the data limitations, because that's getting better all the time. And I think there's now enough data to come up with sort of reasonably good products pretty much in most places in the world. And if you need more data, you can always do more analysis and more understanding. So when I started in this, sort of 6-7 years ago, data was a serious limitation. I think now it's probably one of the least of our issues moving forward on my side.
That's quite a development then, I think, given some of the conversations we would have had even 2 or 3 years ago on this topic.
It's phenomenal. You look at the modeling now, the climate risk models out there. You look at not only the data itself, but the understanding and experience that the insurance companies and reinsurers have with that data means that they're now willing to price more risk and do more products on that data. Obviously, there's always a little bit of a gap, but I think, as you said, if we had this conversation 6-7 years ago, it would be a completely different story.
Right. There's a question come in which I think touches on a point that I find really interesting as well. The question is, who in the organization drives the development of nature-based solutions and the insurance thereof? It could fall somewhere between underwriting, resilience, and impact investing. And I think the really interesting thing for nature-based solutions is that they do potentially fall into any and all of those buckets. In particular, nature-based solutions are not only important in reducing the amount of carbon in the atmosphere, but they also provide resilience to weather events. Mangroves being the classic example, where not only do mangroves they're potentially much more effective than standard forests in removing carbon, but they also reduce the risk of inundation in coastal areas. They provide ecosystems for biodiversity and so on. The value of particularly a mangrove is manifold, and I'm just wondering how that gets reflected when you think about the insurance of nature-based solutions, are we thinking specifically about a very narrow view in terms of carbon removal, or as insurers and people in the insurance value chain, do you think more broadly about all of these other aspects? I'll sort of open that up to all of you and just sort of understand how you think about these things.
I could just jump in. Just
go on, James. Yep.
Just on the resiliency aspect I think is a key underwriting consideration as well. So when if we're looking at a project, historically a lot of the forestry projects or afforestation, reforestation projects have been monocultures of non-native species, which poses quite a systemic risk to changing climate, heat, drought, pest, disease. So a good project for us will have mixed species and endemic native species that are going to be more resilient and more attuned to the local geography and climate, and also the local community that are the stewards of that project are going to be more familiar, and hopefully that makes it a more sustainable, better, reliable project, and it's going to deliver on what it promises.
I guess I can jump in next. Yeah, I mean, when we're thinking about insurance and nature-based solutions, I mean, I suppose there's a couple of different, sort of ways that you could come at that, right? I mean, what I've at least been focusing primarily on is sort of insurance for nature-based solutions, right? And sort of the underlying ecosystems and their services. And that, is particularly relevant in cases where, again, you have sort of identified a compelling payout use case and sort of value add of having a parametric policy in place to enable, whatever scientifically proven immediate, restoration interventions might help the ecosystem itself. Another way to sort of think about insurance and NBS is, of course, as you were describing, Anthony, from the perspective of, the protective value that these ecosystems are providing, and mangroves and sort of flooding or coral reefs and sort of wave attenuation. There's numerous examples. And so, another way that you could come at this is thinking about, okay, how to actually price in or factor in that risk reduction into, the indemnity sort of, property insurance calculations and sort of broader cat modeling exercises. That I think has been a trickier nut to crack. I mean, I don't think there's really, at least that I could point to any known examples where you have indemnity policies that are, sort of actively, explicitly capturing and pricing in the risk reduction value that NBS are providing. But I suspect and hope anyways that, that is sort of where some of this goes in the future.
Maybe perhaps a new modeling challenge for you as an insurer.
Yeah, I think it's a big challenge, which is, as you say, is why the AXA Group or AXA XL has made nature a pillar, and with AXA Climate itself, what we've tried to do is we've sort of tried to create a work stream amongst nature-based solutions, which brings together the underwriters, the modelers, the consultants, the trainers together, just understand sort of how can we look at the solution as not just from different angles, but together in one way. And also when we talk to people from outside the entity and outside the organization, how can we bring all that in together as sort of so we can start creating something, as you say, jointly, because as the question said, it does fall between underwriting, resilience, and impact. And AXA is both an insurer and an investor, so it covers the whole sphere. And it's the idea of you can't do this in a vacuum. People have to sort of work together and share ideas to come up with these innovative solutions.
And I think that leads us nicely into next question that's come through, and maybe see how we go. Does anyone have any tips on how to pitch the business case for nature-based solutions to senior management? And a nice kicker here, particularly if your company lacks a clear group level sustainability strategy. I guess my instinctive response is, first thing is get yourself a clear group level sustainability strategy. I think, that which is not an easy thing to do, but I think super important, and in particular, make sure it's articulated well, across what do we think about risk and the risk associated with climate change, sustainability, how do we think about the opportunities, and then also how do we think about impact, both our impact on the outside world and the outside world's impact on us. And I think getting that sustainability strategy well articulated, I think will naturally lead into a discussion about nature-based solutions and their impact in all of the different forms that we just talked about, because they really do play into all those three, risk, opportunity, and impact dimensions of a sustainability strategy. But maybe Toby, come to you first if you've got any practical advice on how to get this up and running within an insurance company.
I think first, as you say, unless they've done a sustainability kind of come up with some sort of strategy, you're not going to go anywhere, because they need to understand what the risks are and what the rewards are. But as I said sort of at the start of this panel, 50% of global GDP is dependent on nature. So if you're not looking at this kind of stuff, you're falling behind. But I do think you need to start from the data. You need to get the board level to understand, to do a full risk analysis of their business or their market, to have maybe some training to understand how they fit in with the natural environment and how that all connects together, before you start sort of doing individual intrinsic solutions on that. I think you need the more holistic view before you can start becoming much more sort of tactical on what you're looking at.
James, maybe next to you. I mean, Peter, your whole existence is predicated on there being a business case for nature-based solutions. So without giving away the special sauce, how would you think about that question?
Well, I think if you're pitching to senior management, then you need to show what the investment opportunity is. I mean, long term, for sort of the 2050 net zero timeline, all the world's natural capital represents about 30% of all the sort of possible effort that we need to reach net zero in terms of reductions and avoidance. But in the short term, there's going to be massive investment. I think there's something like $150 billion that have been invested into nature-based solutions to date. The forecasts are that there's an additional sort of $200 billion that need to be coming into the space by 2030 to get us on track. So those are some massive numbers. That's just the investment figure. That's assets and liabilities that are going to need insurance products for sure.
And maybe Sarah, how are you seeing demand for insurance changing? How has it changed over the last few years, and what's your sense of how it's going to change over the sort of near to medium term?
Yeah, so I mean, it's definitely evolved, pretty dramatically, as Toby mentioned earlier. I think if we were to have this conversation, 5-6 years ago, it would be a very different one than we're having today. So there has clearly been advancements, but at the same time, it is still a pretty nascent, area of insurance, and many of the solutions that we've been a part of, have been fairly bespoke in nature, and sometimes necessarily so, but. I think the hope and expectation is that, these now, piloted, type of programs are proving their value, and, there will be opportunities to sort of scale and replicate, and obviously ensuring that they're fit for purpose, for the relevant local context. But I think there's a lot of expansion opportunity with respect to parametric insurance for ecosystems themselves. I think when it comes to building out the sort of case back to your question, I mean, totally fully agree with the points that you've all made so far. I mean, I guess the only other one I would add is that I think for, I suppose, better or worse, many companies are beginning to realize and better understand that the impacts of climate change, right, the severity of events, the frequency of events. This is only getting, going in one direction, right? Which is not a terribly optimistic one. And they're beginning to, I think, sort of see that while, some of these events, drought, heat waves, flooding, wildfires, some of them may not cause direct sort of damage to their assets. They potentially could have a large and very negative impact on the company's costs and its balance sheet. Dependence on different value chains, supply chains, et cetera. So I think, it is important to sort of understand the costs, understand the opportunities, have that strategy in place. And I think, again, for better or worse, we're probably going to have sort of more real world examples to help kind of drive us in the direction that we need to as well.
Great. Thanks very much, Sarah, and thanks everyone. Maybe some closing reflections. First of all, I think it's clear from what we've heard that the importance of nature and nature-based solutions, both sort of directly in the fight against climate change and to remove emissions, but also the value of nature more broadly is really still being understood, right? So both the underlying demand through climate change, but also the understanding of the value of nature-based solutions. Those two things together, I think, are likely to mean there's a huge amount of opportunity for insurers in a wide range of different applications with nature-based solutions. And Toby, I think the way that you characterized AXA's role as, we provide insurance, but we're also an investor, and presumably you have your own net zero targets as well. So that ability to invest in nature-based solutions, either as an asset to generate returns through carbon offsets and so on, or to offset your own carbon emissions and then provide insurance and then potentially benefit from the risk reduction value of some of these nature-based solutions. I mean, there's a huge amount of kind of reinforcement once you start thinking about nature-based solutions and the role that nature plays and the role that insurance plays in supporting that. It's clearly quite complicated, particularly, James, what I thought was a very simple business of insuring carbon credits turns out to be a very, very rich, detailed, multifaceted insurance business. And that was really interesting to hear. But, I think as more insurers focus on their sustainability strategies and as we get, increased focus on disclosure through CSRD and ISSB and so on, these kinds of materiality assessments that you need to do through that are going to really bring to the fore, the value that nature plays throughout all of the things that we do as insurers, and therefore potentially the value that getting into the insurance of nature-based solutions can also bring. So I think it's a tremendously exciting area to get into. So really want to thank you all for your participation here. It's been a fascinating discussion. I trust the audience has also found this really interesting and hopefully goes away a bit inspired as to what we can all achieve as participants in the insurance industry. So Anthony, I'll hand over to you. There we are.
Thanks, Anthony. Yeah, brilliant panel, brilliant discussion. Thanks to everyone that took part in that, and also the previous panel. Thanks to Diana for a keynote that was fantastic as well. Do also check out our presentations. We've got 2 presentations on demand. So one's from Luke Baldwin of Nature Broking. That's a company that connects business with nature-based solutions in the UK, and he's giving a presentation on nature risks and solutions and how that links to insurance. The other one is Wajat Khawaja of Salam Takaful, and that's a case study on a parametric solution supporting sustainable farming in Pakistan. It's more of a resilient solution than nature-based, and we've also got it in the on-demand content for our previous event on resilience. But do check that out if you're open to global resilience building collaborations, because they're looking for partners. We had great numbers in today, so I think it kind of illustrates what an important issue this is. All the content and resources are available online, so they will be on the platform on demand until Christmas. So feel free to get your colleagues who might want to register to sign up using the same link that you signed up to the event for, and they can continue to access this content. So thank you for everyone for attending. Again, thanks to Oliver Wyman for supporting this event, and thanks to the speakers. It's been fantastic. I hope that you've got lots of insights and practical takeaways from this, even though we are, as is patently clear, right at the start of the journey on nature, but we certainly need to get moving quickly. So hopefully today has helped in some way. And finally, if you haven't already, please do join Better Insurance Network for ongoing content, networking, events. Check out our sustainability e-learning offering, which is available to individuals or corporates, and is CPD certified. Our next big event is the Sustainable Insurance Summit, which is in February. So there's also lots of interesting stuff we've got planned for 2024, some in-person networking, mentoring, lots of thought leadership content. So please do sign up and we can keep you informed of everything we're doing at the network. So that's it for today. I hope you've enjoyed it and found it useful. And thanks again to everyone, and we'll see you again next time.